Accounting encompasses various subfields like financial accounting, management accounting, auditing, taxation, and accounting information systems. Financial accounting concentrates on disclosing an organization's financial data to external stakeholders, such as investors and creditors. It involves recording business transactions and preparing financial statements based on generally accepted accounting principles, GAAP. Intercompany accounting, another subfield, revolves around handling information between related entities, like parent and subsidiary companies. This area ensures accurate record-keeping of transactions within companies with shared ownership. On the other hand, management accounting focuses on providing information for managerial decision-making processes, utilizing internal measures and reports not bound by GAAP. Within management accounting, reports may include both financial and non-financial data, supporting decisions aimed at achieving organizational goals. Auditing, a critical aspect of accounting, involves examining and assessing financial statements to provide an independent opinion on an entity's financial position, operations, and cash flows in compliance with GAAP. Moreover, accounting information systems are integral parts of organizations' information systems, specializing in processing accounting data. Many industries, including banking, finance, and retail, employ artificial intelligence-based systems for tasks like fraud detection and customer service. Tax accounting in the U.S. focuses on tax payment preparation, analysis, and presentation, requiring specialized accounting principles distinct from GAAP. Different forms of business ownership in the U.S., such as sole proprietorship, partnership, corporation, and limited liability company, are subject to varying tax rates based on income levels. Additionally, forensic accounting deals with disputes or litigation engagements, meeting court standards in its practices. Lastly, political campaign accounting involves establishing financial systems and managing financial transactions according to political campaign regulations. Initially introduced in 1976, it ensures compliance with laws governing financial operations in political campaigns. Professional accounting bodies worldwide, like the American Institute of Certified Public Accountants, AICPA, and the International Federation of Accountants, IFSC, with 179 member organizations, including the Institute of Chartered Accountants of Scotland, IKS, and the Institute of Chartered Accountants of India, play a crucial role in providing education, training, and qualifications for accountants, such as Certified Public Accountant, AICPA, and Chartered Accountant. Various countries have single professional accounting bodies overseeing the field, while others have specialized bodies for specific areas like the Chartered Institute of Management Accountants, CIMA, in the UK, and the Institute of Management Accountants in the United States. These bodies not only offer educational programs, but also handle the administration of different accounting designations. In terms of auditing, based on the company's size, they may be mandated to have their financial statements audited by a qualified auditor. Audits are typically conducted by accounting firms that have evolved significantly over the years. Auditing businesses saw substantial growth in the late 19th and early 20th centuries in the U.S. and Europe, leading to the formation of large international accounting firms by the mid-20th century. Several mergers further consolidated these firms, eventually resulting in the dominance of the auditing market by the Big Five accounting firms, Arthur Andersen, Deloitte, Ernst & Young, KPMG, and PricewaterhouseCoopers. The fall of Arthur Andersen post the Enron scandal narrowed down the Big Five to the Big Four. Standard setters like the International Accounting Standards Board, IASB, issue generally accepted accounting principles, GAAP, which are national accounting standards. The IASB also formulates International Financial Reporting Standards, IFRS, followed by 147 countries globally. Various independent standard-setting boards, supported by IFAC, establish standards for international audit and assurance, ethics, education, and public sector accounting. Each country may also have unique accounting standards, setting bodies. For example, in the U.S., the Financial Accounting Standards Board, FASB, issues statements of financial accounting standards forming the basis of U.S. GAAP. As of 2012, there has been a push for convergence towards or adoption of IFRS by major economies. For a career in accounting academia, a doctorate such as a PhD or a DBA is typically required. Professional accounting qualifications encompass designations like Chartered Accountant and Certified Public Accountant, with each having its specific requirements and ethical codes that members must adhere to for practice. Both academic researchers and practicing accountants contribute to accounting research. Methodologies in academic accounting research encompass archival research, experimental research, analytical research, interpretive research, critical research, case studies, computer simulations, and field research.